Dear students, I am going to explain the second module in the preparation of final accounts. So you know that in the final accounts, we have three statements. One is trading account, profit and loss account and balance sheet. Now in this module, I am going to explain how you prepare trading account and I am going to do two problems also. So how we will prepare trading account. So trading account, you have to remember that it's the result of buying and selling. So whatever they will buy and make it as a product and they will sell, that result will be debited through the trading account. So in that you have to remember direct incomes are credited. So direct income will be first one will be sales, net sales. That meaning sales minus sales returns. Then closing stock also will be there. Closing stock will be the stock unsold at the time of trading period. At the end of the trading period, that is the closing stock. Similarly, direct expenses are debited. So now we will explain clearly in the other slides what are items to be credited, what are items to be debited. So here you have to remember that direct expenses are debited. So direct expenses that is directly involved in the manufacturing process. These expenses are debited. So direct expenses are debited in the trading account. Direct incomes are credited. So we will get the gross profit or gross loss. If sales revenue is more than the direct expenses, it will be gross profit. If it is reverse, it will be a gross loss. So you have to remember that after preparing this trading account, gross profit or gross loss is transferred to profit and loss account. Now items of trading account, I told you debit side it will be the expenses and credit side it will be the incomes. So debit items you have to remember it's opening stock. First is the opening stock. So you have to remember opening stock at the beginning of the financial year, whatever closing stock for the last financial year, that will be transferred as opening stock. Whatever items in stock with the business unit, that will be the opening stock for this financial year. Net purchases, it's very important. Purchases will be there. Some items you may not be agreeable with the quality or standard or the discount. Some items you will return. So you will get net purchases. That is purchases minus purchase returns. Then direct expenses are there. Direct expenses, freight. That meaning if goods are transported through ship, you have to pay duty. You have to pay octroi. If goods are transported through road, GST will be there. Then you have to remember that factory expenses. Factory expenses, sometimes they will directly manufacture the product. So direct factory expenses will be there. You have to remember, this is easy to remember, what all directly involved in the production process. These items are debited to trading account. Similarly, we can see what all the credit items. Credit items you have to remember net sales. See, sales also, some customers will purchase the item. Sometimes they may disagree with the discount, sometimes they disagree with the quality, quantity. Sometimes returns will be there. So from the actual sales, we will reduce sales returns, you will get a net sales. Similarly, the closing stock will be there. Closing stock of the financial year. That is stock which is not sold at the end of the financial year will be closing stock. So these are the items usually come in the credit items, credit side of the trading account. Now two problems I will do. First problem is opening stock as on 1/4/21, 12,500. Purchases 22,000. Purchase returns 2,000. Wages is a direct expenditure. It is, if it's salary, it will go to trading account. You have to remember that if it's wages, it is trading account. If it's salary, it will go to profit and loss account. Wages and salary also it will go to profit and loss account. If it's wages, it's directly involved, it will come to trading account. Carriage inwards. Carriage inwards meaning the expenditure involved in bringing the material to the manufacturing unit. 2,500. It's a trading item. Then sales. Sales should be credited. Sales returns is there 3,000. Closing stock as on 31/3/22. That also we have to include. So prepare the trading account. Now, when we are preparing the trading account, you have to remember this is very important. So this you have to remember the trading account of Mr. A. This is how you will write as on 31/3/22. The latest year I have taken it for example. So debit side if you see opening stock 12 to opening stock 2 and buy, that we will use. Debit side we will use 2. Credit side we will use buy for all the words, for all the items. You have to remember that. So to opening stock 12,500. To purchases 22,000 less returns 2,000. So it is 20,000. to wages 20,000, to carriage inwards 2,500. Now by credit side you have to write by sales 57,000, that you're writing in the inner column, less returns 3,000. So outer column 54,000. By closing stock 15,000. So now you have to see the total of both sides. So total which side is higher, that will decide whether it's a profit or loss. Here credit side is more. Credit side total is 69,000. So you will balance that expenses minus revenue. So you will get gross profit be carried down because we are transferring this item to the profit and loss account. BF stands for balancing figure. So this 34,000 is the balancing figure. Imagine if you got this item on the credit side, then it would have been gross loss, which will be transferred to profit and loss account. That corresponding entry will come in the debit side of the trading account. Now the second problem, opening stock as on 1/4/21, it's 23,800. Purchases and purchase returns 25,000 and 2,700. Sales and sales returns 48,000 and 2,800. Wages 7,900. Freight charges 1,700. Carriage inwards 2,350. Factory expenses 2,100. Closing stock as on 31/3/22 28,500. Prepare the trading account as on 31/3/22. Very simple. You have to write the format trading account of Mr. S. One name you can give as on 31/3/22. So here debit side all the words we will start with to, and credit side all we will start with by. So to opening stock 23,800, to purchases 25,000 less returns 2,700. You will get 23,300. To wages 7,900. To freight 1,700. To carriage inwards 2,350. To factory expenses 2,100. Now you have to write the credit side. By sales 48,000 less sales returns 2,800. So you are getting 45,200 on the credit side. By closing stock 28,500. So total is 73,800 total of the statement. Now you have to see which side is higher. So the credit side is higher, that is 73,700. You are writing on both sides the total. Now the next step is you have to balance this account. So when you balance, you will get a gross profit 13,550 that will be transferred to profit and loss account. That is the second statement you will prepare for the final accounts. BF, that is the balancing figure. So balancing figure will be the gross profit or gross loss. If it's gross loss, it will appear on the credit side of the trading account and it will appear on the profit and loss account debit side. So that is what I want to explain in this module. So this is how this is what you should know about the trading account, and I have explained with two problems. Thank you.